Okay, hi guys. Welcome to another FX Street webinar. My name is Ian Coleman. I'm one of the traders and analysts at firstfortrading.com. Stay in trends. We're going to cover as many currency pairs as possible in the time frame that we've got, which is an hour. And you never know, we might even get some trades. Well, I've got a trade on actually. I've literally just shorted euro dollar at 94. I know that looks very bold at the moment. I'm out of half of my trade already. I haven't got the stop into entry as yet, and I'm looking to try and bleed it a little bit, but I've taken enough off to cover my stop, which is what I aim to do. Trading is not just about analysing the market. That's actually relatively easy as far as I'm concerned. One of the two main aspects are your emotional state, whether or not you can eliminate your emotions, and money management. And money management basically means that you try not to risk too much of your capital per trade, and also that you try to lock in profits as early as possible, and then try to bleed your existing balance. I try to trade in sort of minimums of 4 lots or 4 units, and then get 2 off at a certain level, and then try and run the other 2 as far as possible, basically. So we're going to start with euro dollar, as everybody does, a favourite currency pair. We're going to break it down, and then we're going to discuss where we think it's going to go next week, near the end of the month. So we will have a look at the monthly charts. These are actually called AMRs, acute monthly reversal candles. If we have any that are relevant this month. Okay, obviously we've got another week to go as yet. Okay, so just to discuss my chart settings first, I've taken off all the lines for the cloud. Okay, that's one thing I will say to start with. Just going to get a cursor on here because I know you guys won't be able to see where I'm pointing to otherwise. Yeah, I've taken off all the Zen lines and the lagging line, because really what I concentrate on most of all is just support and resistance levels. So I'm more worried about where support is coming into. We've obviously got support on the low here, sort of 3rd of October that week, and then resistance up to this side, and then a breakout and retest. What you will see, we do another seminar for, excuse me, just get a drink of water. Okay, we do another seminar for Ishimoku cloud trading, and there we explain all the ins and outs of what to look for with regards to Ishimoku. But at the moment, for this webinar, we've just got the basic settings. Okay, so we're just purely looking at support and resistance. I've got some EMAs on there, my favourite EMAs. The reason I use these exponential moving averages is because they have a tendency to work well on all time frames and on all, not just FX pairs, but all products. Okay, it's a 15 EMA and a 62 EMA. Now the reason they're exponential moving averages and not simple moving averages is because I like it slightly weighted on the front end. Okay, that basically means, especially for the 64 EMA, you're not taking, we are taking data of 64 candles back, but it's more relevant to recent price action than it is to old price action. I think that's very important. The reason it's a 62 EMA is because I'm quite fanatical about Fibonacci levels. 61.8 being the golden ratio, 62 is as close as I can get it. The 15 setting is basically a quarter of that. Okay, so the 15 my first support or resistance level, and the 62 is then my second level, and then normally it will sort of move up towards the cloud. I take more bias for the cloud on a weekly and a daily time frame than I do on a 4-hour and hourly. Okay, I use 4-hour and hourly to give me a bias. I then use a 5-minute chart for my own entry levels. Okay, the candle formations that I'm most interested in, obviously we've got not hundreds, but there are various candle formations that are out there. The ones that I want to see, why is that not eclipsing? Let's get rid of the cursor for a second. Oh, don't do that. Taking that one, okay. Eclipse. Okay, I'm just going to point to them, I'm afraid. They're playing up at the moment. I'll put the cursor back on. These are CQG charts. It can be a bit, it's a professional chart package, but it can be a bit temperamental. So what I want to see is I want to see bearish or bullish engulfing candles, okay, or inside Arami candles. And they're my main two setups. I like morning stars, evening stars. I'm not fanatical these are the only charts that I look at, okay? I don't use any other filters on top. This is just Ishimoto 1562 EMA and then an RSI with a 15 setting. The RSI with the 15 setting is basically to give me a bias. Okay, I want to know whether or not in that time frame, you've got to remember it is only in that time frame, whether or not I should be looking for bearish or bullish signals. Okay, going back to the chart formations, candle formations, I'm looking for outside bars or inside bars. Okay, inside bars are obviously completely opposite. An inside bar or an Arami bar, we have one here. Okay, I want to see it inside the previous range. I know it's not textbook. Textbook inside Arami is the body has to be inside the previous body. Okay, I'm not particularly bothered about that. People look at different time frames. Okay, and these CQG charts are actually taken off the Asian Open, I think. And because of that, you know, if you looked at if you had a US settings on your charts, then obviously your chart patterns, if you're going down into daily charts, are going to be different. Okay, so obviously people around the world have different starts and ends to their day. So what I look for is the range. Okay, so I'm just looking for the range to take out the previous. So here we've got a decent reversal candle. Okay, so we've got a bullish outside, so a full range outside the previous candle bar, and then here we've got exactly the opposite. We've got a bearish outside bar. Okay, here an inside Arami followed by a bearish outside bar. Okay, I want to see these. I'm not just going to pull trades sort of willy-nilly. I want to see them at areas of support and resistance. Now, my areas of support and resistance I'm wary of the RSI 50. Okay, so when I look at the RSI hitting a 50 level, be it in the weekly, the daily chart, or the 4-hourly chart, then I'm going down into shorter time frames to see whether or not I'm getting any reversal patterns. Excuse me, another drink of water. It's been a long week. And then I'm using Fibonacci. I'm using chart patterns. I'm using head and shoulders formations, etc., wedge patterns. Okay, but most important thing is how price reacts around areas of support resistance. So here on the weekly, we obviously got a bearish engulfing that everybody's probably been going on about for quite a while. We had a move up, and then we've had this corrective sequence down. Now, this level is obviously quite important because If it's a corrective sequence, impulsive moves are in 5 waves, and I'm not bothered about crossovers. I'm not fanatical about Elliott waves. So we've got 1, 2, 3, 4, 5. Okay, corrective patterns are in 3 waves, and normally the waves within these corrective patterns are in 3 waves, and we can quite clearly see here we've got 1, 2, 3, 1, 2, 3, and the third wave, the higher wave, can be in 3 or 5 wave pattern. The only thing that concerns me here, I know it's taken out this low, so the week 12th of March we had a low of 130.003, and this week we actually broke it by 8 pips. Okay, so as far as chart formations are concerned, that is a lower low. But normally on an ABC correction, the high from this candle here, the 20th of Feb, to the low of this candle will be replicated from the high to the low here. So it's sort of dictating that it's not gone far enough. It did reach 50%, but it doesn't look strong. Okay, very hard at the moment to sell into this candle. Okay, remember what I said about bullish and bearish engulfing candles. This is at a prime area at the moment. Not only, as far as I'm concerned, have I got the 15 EMA, which has held price action quite well. That's held as resistance. Okay, but I'm also under the 50 on the RSI. Now I know this is going to react up after the close, because it's obviously, if you look down to the bottom of the chart, I'm just hovering over. If you look all the way down, okay, obviously it hasn't reacted yet to this week's price action because it can't, because it hasn't got the calculation yet. Okay, so there is a chance that will move up. I don't think it's going to move up that far to take out the 50, which is the reversal. Okay, 132.13 is the prime level. If she can breach 132.13 today, then I have, as far as I'm concerned, one of my outside bars. If I put on candle formations, and again it won't show it at the moment because it's not closed as yet, it would show that as an engulfing candle because the bodies have engulfed, but the whole range hasn't engulfed. So at the moment I'm looking at that, and I have taken a little short, as I said. I've covered my risk at the moment because I'm then breaking it down into time frames. I'm now getting off the forecasting a little bit here, but this here, and this is this strong support level, which is blatantly obvious. We've got some decent moves off of this level, so it's been attacked 3 times now. Normally chart formations will break on the 4th attempt, so okay, we've got a long way to go back down, especially if we're going to take out all that weekly action. But we've also got the 62 EMA coming in here as well. So I've got the 62 EMA. I've got that top of that weekly candle, which is here, which I know is going to be protected. Okay. I've got the top of a 4-hour Ishimoku cloud. What else have I got? I've got the RSI still under 50 on this timescale, on this daily timescale. So there's chance for shorts here. Okay, I know I'm mainly a trend follower. Okay, but if an opportunity arises to take a short scalp and to get in and possibly get the top of the turn, then I will do it basically. Because risk reward then becomes extremely good. If she closes above this level, 132.15, and obviously we've got the top of this ascending triangle formation, which is going to come in at 133.18, and I would have thought that would be the area that the bulls will attack going into next week. So literally today, it's quite good that we've come literally on at this point, is a prime time. Okay, a breach of 132.14, and it only has to be a breach because it's not going to retrace all that bullish body. Okay, so a breach of 132.14, and that's going to be an engulfing candle, and the buyers, the The bias, my main bias comes from chart formations, okay, candlestick formations. The rest of this, all these other settings on the chart are highlighting support and resistance, okay? So it's the price action that takes the relevance over everything else. It is then the shorter candle formations and the S&R, the support and resistance, that then gets us into trade. So let's just break this down, okay, to show you how I got into this one. So I've got my resistance, I've got my weekly resistance, I've got my daily resistance. We'll go down to 240 minutes. And this is basically what I look to do. I've always done time frame breakdowns, so I always break it down, see what's going on. Okay, nothing here. Okay, you can see this previous high up going to the what is it, the 12th of April. Okay, so we're taking this. We're not taking it off the 4 hour. We're not taking it off the hour. We're taking it off that weekly. That's why you've got to keep your mind on these chart formations. Okay, and not get blinkered just by looking at a 5-minute chart. What's forming on this 60-minute chart? Well, we know what's forming on this 60-minute chart at the moment. We're only 17 minutes into it, but we're getting an inside Arami candle. So an inside Arami candle, if she stays within this range, is dictating that there is investor indecision at that high, okay? That the bears are coming in to protect it, and there's a chance to push lower. First area of support that I'd look to, 131.52. Just note this move up this morning, okay? For fanatical scalp traders, okay, breaks above 50 on the RSI, comes down, then, okay, an RSI support line. What happens? We come in, we hit the RSI support line, we're in between these moving averages, so the bias is still to the upside, okay, and then we move up, comes down, 15 EMA moves up, comes down. Remember, we're not looking for sell signals here because we've got no reason, we've got no resistance, 240 minutes, we haven't got resistance daily, weekly, etc. Okay, so the bias is still pushing up, but we have got resistance here, okay, because we've taken that resistance off that weekly chart, then down to short time frames. And again, don't get too panicky about price action inside here, because this price action, you can't turn a train that quickly. So the train has left the station and it's really gathered speed. If she's going to turn, you know, there's going to be some fights going on around this turning level, and it's really not until we get to our shorter time frames and we start to breach below 50, breach below these moving support levels that I use, that the bias can change. Okay, so at the moment this is a scalp. It's been covered, as I said. I'm looking for around 131.50 to take some more off. So got in. What was my level of entry? Got in at 94, which is here. Okay, took some off here. Okay, my stop is above here, so I've got I'm virtually covered. Okay, and then I'm looking to take a little bit more off here and then leave one unit on to bleed down. Okay, so any questions? And at the moment, you know, this isn't looking powerful. This could be, and as far as the bulls are concerned, just a 3-wave correction. This is obviously a prime level as well. This can take out this swing high from this morning at 8:30, 9 o'clock. Then wave patterns have been destroyed, and we're no longer making higher highs and higher lows. So any questions about euro dollar? As I said, prime area at the moment. If this holds, and we need to push down quite aggressively, then we could get some decent reversal candles on the 1 hour chart. Okay, and then we need to look up to time frames to look at support and resistance in other time frames. And then if you're adamant that you still think euro dollar is going to come lower, you start building your short. Okay, use a bit to get you on, bank it so you've got something to play with, and then as that last unit bleeds, hopefully, okay, you can then start adding to it. So you risk every time you're adding into it. Obviously, you're then taking your average of your trade, so you add back in 1 unit, okay, and then you try and get this last one to bleed down. You've already banked some profit, and you try and get the last one to bleed down. Any questions about euro dollar? So I have to say, sorry, for the forecast, if it breaches 14, okay, then up towards that weekly channel that we've talked about, or the daily channel, I should say. If it doesn't breach and hold 14, then there's a chance of building shorts here. But we'll wait and see. Just bouncing a little bit there. I looked for 5-minute candle formation. So as I said, it's fanatical about inside and outside of army. I saw this decent shooting star in 5 minutes, which isn't my favourite candle. And I was actually looking at this candle here, and it was just jobbing around inside, and I thought, well, that's going to end as an inside of army. So I sold that candle. Got slipped a little bit, but I was setting up to do this webinar basically. I suppose I was relatively lucky because I wouldn't have sold that candle because it wasn't an inside bar. Okay, so I take them off, those inside and outside bars, I take them off 5 and 10 minutes. And even the 10-minute candle didn't give us an inside bar, but it's working out all right at the moment. Sometimes you've got to go with your gut as well as your system to a certain extent. Stops, which are obviously aren't talked about very often. Whatever my trigger candle is, so if I've got an insider army here, I then take, and it's on that time frame. Okay, so if it's on a higher time frame, you take the candle in the higher time frame, and these setups will work in most time frames. So you take the high 07, you take the low 94. Okay, 13 ticks. Is that correct? High 07. Yeah, 13 ticks. You then add it to the high of that candle. Okay. If you don't, there's a very good chance that we'll just get a little lip up, take out the shorts, okay, and then come down. So I've found by experience it's worth that bit of risk on to get the reward. I don't know if any of you ever look at DeMark. DeMark, I'm in at 94. I'm up about 7 ticks at the moment on my balance. I've already cashed in half. Got 4 units on. I've taken 2 off. I'm two short. I'll take another one off at 131.50 if it gets there. If it breaches this level here, then my stop will be to entry. Okay, and then I'll look to take one off here, and after that, I'll just let it go basically. Because I've got my bit in the bank, and a lot of the time, I find a lot with retail traders as well. Nobody's looking at big pictures. Okay, everyone's trying to just get a bit off, a bit of a scalp in, and then run away. You then sit there, or you put your PC on in the morning, and it's moved another 100 ticks, and you sit there and think, oh Jesus, I was short, I was long cable yesterday, and now look at it. If you can get your stop loss into entry, then if it's your view, and if you've got a good reason, you've got decent reversal candles, coming up, it's produced decent reversal candles on your larger time frame, and you really should be looking to try and build positions, or at least until you get down to sort of decent support and resistance levels where it's quite solid. That's just my opinion, obviously. The 2 averages are a 15 and a 62 exponential moving average. Okay, on to the next one. Let's have a look at cable. And the reason why I was just in the chat earlier on, I was just talking to Somi, and he was saying that spinning cable was full of surprises, and I just posted on there that I thought the highs were going to be short-lived, so that was obviously before this amount of price action. What the hell is that? That's not a cable. Not necessarily only use green candles. There we go. Okay, so breaking it down. This is a monthly chart. Okay, so just note where your support resistance levels are. Note here where this monthly, we've been tracking around the 50. Okay, normally when it tracks around the 50 line, it basically means that we're consolidating. Now this isn't consolidation, but in shorter time frames, if you're around the 50 line, it means that you are consolidating. And as far as the monthly chart is concerned, you know, that's trend. This is consolidating. But what we have got, we've got spikes lower, we've got an engulfing candle here to the bias was to the upside. This was actually an acute monthly reversal candle in December, okay? And it's just showing that spikes down have been rejected. That was actually rejected at the Maribuzo line. For those, again, that don't know, a Maribuzo line is the high, so the open and the close of a candle, and then 50%. And we know, we could do this calculation quickly on here. Won't give me the open and close. So here on this one, 178.07 and 78. Come on, calculator. Not calculator, it's me, obviously. Close 160.75 divided by 2. Okay, 169.41. So I'm just going to show the Maribuzo line for this. Obviously, very relevant. A Maribuzo or a relevant candle is one that it's out of the ordinary, okay? It's a lot bigger than the others. So you knew that it was an impulsive bullish move or bearish move. And the Maribuzo line is 50%. Now we know that the market moves a lot between 50 and 61.8%. Okay, so we want to plot these Maribuzo lines onto our charts as well. So here, 159.41. I don't expect it to be pit perfect, because the market will have a tendency to shoot past most levels. Okay, but you can see here the Maribuzo line from October held well, came up to reject it. Okay, and then we got this move down. So monthly dips are being bought. It looks bullish. Okay, but I'm still wary of the 50 line. Weekly. Now there's nothing here that says that you should be shorting cable. Okay, on the weekly chart, it's bullish. Cable came back. Okay, just on this dip to, and they don't work all the time, by the way, because this is obviously a bearish engulfing candle. What happened on that bearish engulfing candle? It came down, clipped the 15 EMA. It clipped the 50 RSI, and it moved back up. And we've had this monster move really in cable this week, which I didn't expect at the outset. Okay, but it did use that point to move higher. So at the moment, cable looks on both of those time frames, dip buying, etc. looks quite bullish. We've got again a horrible 5-wave sequence down. 1, 2, 3, 4, 5. 1, 2, dictating that we should go to the upside. Inside bars, 1, 2, this one, 1, 2, 3, sorry, and then this one, 1, 2, 3. So it's looking bullish. Euro sterling, I'm a big bear. Okay, so we can have euro dollar lower and cable higher, but we've obviously also got this correlation, this dollar correlation. So can cable move up from this level here as we speak? And let me take it down into a daily. And this is where we start to look at it. This is one messy chart. Okay. Again, 50 lines not acted too bad. The support and resistance spike through here. But what should she get to? She got to the cloud. Okay, cloud. It's deep. It means that we have a lot of support underneath this price action. It moves aggressively in, clips the 62 EMA, okay, which is our second level of support, and then moves up, and we've had 5 bullish days up to now. Is there any reason to think that this currency pair could potentially sort of move down? And we've got to be aware of what everybody else is looking at. Okay. Okay. So put one line in there and one line in there. Okay. Because we don't know where institutional traders are going to be taking their resistance levels from. Now, a very brave man to take it off the top, but it could be a potential wedge formation. Now, you're only going to know that on a break of this level down here, okay, 158.76. So that's a bold shout from here. But there are, again, scalping opportunities. The bias on the longer time frames screams out that you should still be buying it, okay? But then we just break down and just watch how the market reacts around these areas of support and resistance, okay? So we've got, as we said earlier, we've got the moving averages, the support and resistance. We've got the RSI support and resistance. We've got the cloud as our SNR, and we've also got trend lines, okay? The higher the time frame, the more relevant the trend line, as far as I'm concerned. So we've got the daily trend line coming in here. Again, to take it down to time frames. I've sort of got off the beaten track a bit because it was just supposed to be forecasting, aren't we? But what are you doing? Time frame change. Time frame change. Block on. Okay, I'm going to go to the hourly here. 240 is not going to show us anything anyway. Okay. Get rid of this. Okay. So, inside bar, but the signal for the inside bar is a break of the other bar. Okay. So, yes, we got an inside bar at the top just here. We didn't breach here, and it's still pushed up. But we've got a lot of reaction for the last 4 hours now. 1, 2, 3, 4. We know that this area is being protected by the bears. Okay, either profit-taking institutional traders probably, or who knows. But it is being protected. Okay, and we want to go down into shorter time frames. Let's have a look at 10 minutes. 10 minutes inside bar. Okay, at the low, it has broken. So 10 minutes is giving off quite a decent bearish signal. And again, I'm not shorting this myself because I'm a seller of euro sterling long term, so I prefer to be short of euro than I would have cable. So let me just start looking at how this is losing momentum. Not the best wedge in the world on the 10-minute chart, but what have we got? Okay, on a wedge formation, it will basically show you that the market is losing control, that the bulls are losing control. And a wedge is a great reversal pattern because it basically is winding up, winding up, winding up, winding up, but they're losing control of this upward move. And that is highlighted by your momentum indicators. Now, I just purely use RSI, but you just look down to your RSI and you think, yeah, okay, we've got an inside bar here, 10 minute, we're losing a bit of momentum, really got a breach under here, which is 160.97 to get bearish. You might get a bounce off here and a move up to a better entry level. You know, it's a bit mixed. 5 minutes, okay. And there was an even better setup on the 5-minute chart, okay. We've got an inside bar here, which I was looking, if I was looking to sell, I would have shorted, okay, because it broke the previous low. But where would my stop be? My stop wouldn't be above the high, because that would have just been lit. If you see there, the high that on that candle was 22, the high on this candle was 23. So it would have been lit out stop hunted, whatever you want to call it. I'm not a great believer in stop hunts, but you know, a lot of guys are. So the candle would have been the high candle. So we've got a low of 11, we've got a high of 22, so it's 11 pips. We've moved, we'll stop here, would have been at 33. Okay, so long-term bullish in cable at the moment, but to those of you that are trying to learn to scout, it's looking quite like it's overcooked, shall we say. Just looking to see if we've got any decent sort of fib levels there. That's 240 minutes. And it's taken out, this was 261.8%, I think. Yeah, so it's sort of indicated here, 161, 261.8%. It sort of indicated around this level that it was going to push lower. It didn't. It just kept on going up. For more conservative traders, and I hope there are some of you out there. Okay, you want to look for reversal patterns on sort of hourly or 4-hourly charts before you get short. Okay, so cable, long-term bear in a 3-wave correction, but just be careful on this trend line. And also, just notice what we've got here, which is very relevant for price action. We've got previous highs, okay, and they were dominating highs. It was a point of reversal. So you've got a previous high here. You can see that it acted as support here, sort of acted as resistance around here. Okay, so very relevant level that we're on at the moment, sort of 161 the figure. So you need to watch how today closes really. Any questions about cable? No. Let's move the studies off. A bit confused on the next one. So basically, sort of putting it in a nutshell, it's trading is all about trading with the trend. Okay, if there are no resistance levels and you've got clear sky, then you should be taking your bullish signals to the upside. But you've also got to be aware of where the resistance levels are. Okay, what other traders are looking at. What should we have a look at now? For the yen. Let's go through the majors first, I suppose. Can't type today. I do that for a living, it's not good, is it? Okay, the dollar yen. Again, these charts look beautiful at times. It's sort of hit this support, formed an inside bar on the daily, and then pushed up. Had a little reaction off the 15, but not a lot. And the price is still moving to the upside. This extremely strong move up. Okay. Then looking for a 3-wave correction down. I don't think at the moment that this 3-wave correction is complete. And the reason behind that is, okay, 3-wave corrections can be in 5 or 3 waves, as we discussed earlier. Let's do the extension tool. Just lines up a little bit too well for me. Okay, 1, 2, impulse move down, 3, and then this move up. Now this move up has been pretty straight line at the moment, so this area is key. Okay, 81. What is the low? Let's just find out what the low was. Okay, 81.98. Okay, so if it breaches 81.98, they're probably going to get a bigger move up, but then you've still got to be aware. Okay, if it breaks this level, 81.98, then this is part of the corrective sequence. I don't think she rallies and takes the high. Okay, I then think she moves up to around 61.8% of this whole sequence, and then moves down to form a larger ABC correction. So prime area there. Okay, it's reached 38.2, but it hasn't reached 50 or 61.8, which are the prime areas, especially in the first wave pattern. Okay, so going back to the monthly, strong move up. Okay, we haven't really seen a corrective cycle down as yet. Weekly, and again we've got a prime area here. So we said about this low. We've also got the previous week's top to contend with, which is here. Okay, if she can take the top, then we've got a bullish engulfing candle above the 50 RSI and above the cloud, and above the 50 RSI, above the cloud, and above our moving averages on the weekly. So the bias has got to be to the upside. It doesn't mean that she's not going to pull lower to give us a better entry, but the bias will definitely be then return bullish. So again, we've got that area, which, as we said, was 81.98, and we've got this area, which is 81.85. So that small 13 pip zone, I think, could be quite well protected today. If she does breach it, then pullbacks for entry. But we've also got a decent amount of, and strong, it's deep cloud cover here. RSI is just trying to move back into the 50 level. More time frames. Okay. What else have we got? So we've got that 13 pip zone, which was here, wasn't it? 90. What I said it was 98. Okay, so we've got that 13 pip zone. So we've got decent areas. I know it's hard to blindly sell against this strong trend, but we have got decent areas of resistance here. So again, down to shorter time frames, what's happening? Not great. Okay, but it is pausing up around these high levels. Potentially making a wedge into it. To extend that wedge out a little bit. Okay, it's got room to maneuver. Divergence isn't really present on the hourly chart yet. So this zone here is looking quite prime for a push lower in dollar yen. So let's look at 5 minutes. 5 minutes is messy, showing that there's big indecision around this sort of level at the moment. A triangle formation. Okay, triangle formations after a rally up have a bias to break to the upside. You then take the length of the rally. You take that from the break point for your target level, which would blow these well away, might actually get up towards sort of 81.98. If it breaks to the downside, then this is consolidation and the bias is then lower. Again, no decent reversal candles in here really. So you could have taken this one, you'd still be in the game. Stock would have been about here, about 84. Okay, you'd be about flat trading at the moment. But the appearance of this consolidating triangle formation, you probably have a tendency to come out of that, look for shorts at higher levels. Let's do some moving crosses. Shaker. Monthly. Bullish. Okay. Dip bought. But still under the RSI. I wouldn't even be nowhere near yet. Weekly. Okay. It's engulfing. Okay, so this is going against the potential view for, yeah, we'll do, for euro dollar and dollar yen. At the moment, there are only potential views, though, remember. Trend channel. What happens a lot of the time at reversals, and you get chopped around inside these reversals, head, left shoulder, potential right shoulder. Okay, we've got resistance. We know we've still got strong resistance to the upside. So, yeah, it's going to change or going to close engulfing. But we also had an inside O'Reilly bar here with a break lower and a decent bearish move down. 1, 2, 3. And I've got my cursor on, have I? Okay. 1, 2, 3, 4, 5, 1. Where's wave 3? There isn't. We haven't seen a wave 3 yet. So again, conflicting views. Just pushing through, or did push through. It's going to move higher at the close of today. The 50 there. Daily chart. Okay. Pin bar. No, I don't really like to see them. Just hitting the 50 RSI. Haven't breached this level yet. Okay. Impulse move down. Fib extension tool. Overshot. So was that 1, 2, very small 3, 4 in the middle? Let's get rid of that. Okay, very small 3, 4 here, and then a fifth wave 1, 2, 3. So we've got 5 up. 1, 2, 3, 4, 5. Okay, and part of this this corrective sequence. Potentially the move down could even be in 3, 1, 2, 3. Again, not fanatical about wave counts. This level here, 108.46, is prime. At the moment, there's no reason to look for reversal patterns. Bullish in all time frames at the moment. Okay, we're just approaching the 50 RSI from this move. 60 minutes. Again, we can't really count waves here. Overextended. Actually did this 1, 2, 3, 4, and then a 5 up. I don't think the fib extension tool will line that up, but you never know. Overshot. What's going on with my package? That's the wrong thing to say, isn't it? What's going on with my charts? It was supposed to come out. It's better. So spike through. But again, at the moment, we're just getting these stalling charts. 60 minutes showing an inside bar, probably another 9 minutes to go. 5 minutes. I don't know if we'll be getting along here, put it that way. There's more of a tendency to take shorts. Just let me read the questions. Can you look at Aussie yen, please? Is yen weak? Dollar yen upswing. Dollar seems weak. Yeah. You've got to remember how the carry trade works. Most will look to the dollar, look to buy the dollar in times of turmoil. So, as far as the market is concerned, and as far as the stock index market is concerned as well, we're no longer in a point of turmoil at the moment, or a downward trend. So people are selling dollars and buying other asset classes. But you've also got to remember that the yen is the funding currency. Okay, so they've got the lowest interest rates, so they have a tendency to move lower than the dollar. Okay, when you get that move round, so the yen, dollar yen, will invariably go up in times of greed, if you like, or in times of prosperity. The euro yen, Aussie yen, sterling yen will go up more because they'll also have the investors looking to buy stronger currency pairs. Okay. Let's see if we can get Vicky's just typed up that we've got 2 minutes left. These horizontal lines very quickly. Monthly in the zone. I do recommend that book if you haven't read it. Weekly pin bar, just moving back up. Daily. I've actually got a reverse head and shoulders in Aussie dollar at the moment. So, but this is short term. Aussie yen is up. In my opinion, sorry, I always have to put that in the end. Okay, 161.8%. But this corrective sequence, okay, and I think that's all it is a corrective sequence. Okay, has not fulfilled the third wave yet. In other words, 1, 2. What have we got? Bullish engulfing at the base of the clouds. So second wave down, or A, B, C, D. But D, to fulfill its destiny, has to break the high of this candle, which is 84.82. So I wouldn't expect much of a move past that point, and then I think the bears would take control again. Okay, I hope you've enjoyed it. So we didn't get through all the currency pairs, but thought you'd prefer to see what I look at in shorter time frames than just going through numerous amounts of charts. And it's very hard to predict the long-term moves. Okay, you should be looking at the short-term, long-term support and resistance levels, and then trying to get in on the short-term moves. And if you have got that, invariably, if you do trade with these biases, okay, the bias in the 60-minute chart and the bias in the 40-minute chart, off these kind of formations, then you'll have a tendency to be trading with the trend anyway, okay, because it's forcing you to move up. Because if you stick to those sort of rules, then unless the trend has been reversed, you can't take them. You can't take those moves in the other direction. Okay, all the best. Take care and good luck with your trading. Thanks very much.